Hey everyone, this is Kirk here again at OptionAlpha.com. Today was a little bit more active than yesterday. We made 3 trades, 1 closing trade and 2 opening trade. All vertical spreads for the most part. One was a credit spread that we closed out today, and then the other 2 trades that we opened up are just pure vertical put and call spreads, debit spreads that we opened today. So I want to go over the closing trade first. The closing order that we had today was that we actually bought back. So again, it's a little bit confusing that we actually bought an order back for a closing trade, but we had originally sold this EWZ vertical spread, and today we actually bought back that vertical spread for about 5 cents on the total. Now we actually opened this EWZ vertical spread, this call spread, for about 33 cents in credit. So it wasn't a huge credit, but you can see that it was only about $1 wide in the strikes. The 48 and the 49 were the 2 strikes that we traded. So we didn't have a huge room for profit potential, and since the market has moved away so quickly for EWZ, it was very easy for us to go ahead and close this trade out today at a 5 cents credit. We didn't want to hold it all the way through expiration in December, even though we probably could have at this point. So that was the EWZ trade that we made, again, closing out that credit spread. The 2 orders that we opened up today was that we bought a vertical, and this is actually a buy open, so it's a debit that we paid. We paid $1.58 for this vertical spread. We bought the FXY January 94.97 call spread. So in this case, since it's a call spread, we bought the 94 options, sold the 97s to help finance it, and together we paid $1.58. Now that's right about where we wanted to pay for this type of trade. It's about a 50-50 bet that we're making on FXY. It's not a trade that we're making where we hope the premium decays. Since we're actually buying this for a debit, we want to see FXY go up. And so what we're doing here is adding a little bit of positive delta to the overall portfolio. Now you'll notice that the strike prices are about $3 wide here. So the midpoint on a $3 wide would be $1.50. So we paid $1.58, a little bit higher than what we probably wanted to pay, but it's right around that $1.50 that we were targeting for a trade like this. On the vertical side, we also bought the VIX put options, the 16-14 put spread for $1.25. So again, in this instance, we bought the 16 strikes and sold the 14 strikes to help finance the purchase of the 16s. In this case, we want the VIX obviously to go down. Our midpoint on this strike is right around 15. So that's where we want the VIX to go. It's had a nice little pop the last couple of days, and we'll go over that in the chart here soon as well. But it's had a nice little pop in the last couple of days, and so what we're doing is just betting that anytime between now and January expiration, that the VIX will trade sometime under 15 and allow us an opportunity to take this off at a profit. Again, it's not that we think the VIX is going down today, tomorrow, next week, etc. It's just that we think any time between now and January expiration, the VIX will at some point trade under 15, allowing us to take a profit on this trade. And that's all we're betting here. It's a very simple 50-50 bet trade. Again, same thing with the FXY trade above. Now in this case, since the strike prices are $2 wide, 16 to 14, the mid price is about $1. So we actually paid a little bit more in premium, and I've been trying to get into this trade here for a couple days now. So I was okay just today, buying up a little bit more of the market, paying a little bit premium to get into this trade. You don't have an opportunity to trade the VIX like this that often. So I want to get into this trade, make it a good trade that we can hold on to for a little bit here. So let's actually go to some of the charts here. Let's first take a look at EWZ. And you'll notice that EWZ has had a huge move down. When we actually traded this in the end of November, we actually traded it, and again, we sold the call spread. And since EWZ has just continued to move down, that's obviously been good for our call spread. This is a pure trade play where we made a trade on volatility and premium. We wanted that premium to decay in value, and that's exactly what it did. So at this point, you can see that EWZ has obviously made a huge run lower, so we don't want to kind of jinx ourselves and try to hold this all the way through December expiration. EWZ could easily move right back up near our strike prices as we get towards December expiration. So again, take the money off the table, close out the trade, you made a nice profit, and move on, right? So let's look at the other ones that we traded, FXY. FXY, this is a really simple play. We could have done this on EWZ as well. But FXY, you can see, has been really oversold the last month and a half. And so, again, all we're doing is making a pure play that FXY is going to, at some point between now and January, trade above where it's trading right now, and we're going to take a profit on that trade. Same thing, VIX. The VIX closed down on the day, so our trade's already making some money from when we entered it. But you can see the VIX doesn't pop that much, and when it does, it's only up there for a couple days, a couple days to a week at a time. And so what we're doing here is just betting that at some point, again, between now and January expiration, the VIX will trade under this 15 mark. So you see right here around 15, the VIX spends most of its time under this magic 15 number. And when it does move higher, like it did in June, July, etc., even if it does, it tends to come right back down very quickly like it's done many, many times before. It doesn't last too long up there. So again, all we're doing is making a pure bet that at some point the VIX will trade down to around 14, maybe even 13.5, and we'll close out the trade early. We're not going to hold it all the way to expiration. Since we bought this vertical spread, we want to close it out early. We're not trying to let the spread expire worthless. That's the key here that we're going for. So hopefully this helps with these video tutorials. Again, understanding why we're making these trades and what the goal is here. Hopefully this week we'll continue to get some more of the selling pressure that we've obviously needed for a really long time. Things like IWM and DIA are starting to fall a little bit more with the rest of the market, and that's obviously helping premium swell, which means more of these vertical type credit spreads should be coming down the line very shortly. Hopefully you guys enjoy these videos. As always, please ask questions below the video or inside the membership area here. I'll make sure I get to them just as soon as I can. And happy trading.